Okay, all right. Welcome to another Forex session. We are still on trading support and resistance. In the previous video, I explained in detail how we can actually trigger a trade from support and resistance level. Okay, so you can go back to the previous lecture and get to understand how you can trigger a trade from support and resistance in a bullish market. Now, we'll be doing similar thing in a bearish market. Okay, like I told us, we should be able to know when a support has turned resistance and when a resistance has turned support. Now, this is a support level and also a resistance level. Okay, at this point, it became what? A resistance. At this point, is a support. Now, let me trap the price. If there's one thing you should do, always try to trap the price at all time. Trap the price so that you will know when the market has broken a structure and retested it. Always trap the price. Now, the market was consolidating around this area. Now, there are so many persons that actually trade consolidation, which is good. There are people that when the market is here, they will buy it to this place. When it's there, they will sell it to this place. That's also a good way to trade. But I don't really advise you trade that way. I advise you trade with the trend. Okay? You trade with the trend. That is why you should always trap the market. Trap the market. Very important. Trap the market. Trap it horizontally, trap it vertically, and wait for it to break and retest it and wait for a bullish or a bearish big candle that is giving you a sign of buying or selling momentum, then you join the trend. Okay. Now, in this case, I've trapped the price. I trapped the price at these 2 points. Okay. Trap the price from this level to this level. Okay. Now, once you trap the price, you just sit down and wait for the market to break and clearly retest that level. Clearly. Now, let's watch where the market broke out. The market broke out from here, big candle to break, and the market retested it. You see it? Big candle to break, the market retested it. Now, when the market break, so many persons will start selling the market. They'll start going short here, but it is not wise. Like I told us in the previous video, that always wait for at least for a clear retracement in form of a pattern and wait for it to break. Now, I wouldn't have triggered a sell trade here because this is just a one candle break. Now you can see the retracement. This is what I would have done. I always try to know the pattern the market is using to retrace. Now, in this case, this is a pattern. I can call this a pattern. Now, the name is not important. It can form a triangle, wedge, flag. The name is not important. The structure being broken and retest. That is my concern. So whether it's a rectangular structure, a wedge structure, a symmetric triangle, I don't care. Okay, and I don't expect you to also care. What you should care about is know when the structure is broken and know when the market has done a clear retracement. Okay, now if you draw the structure like this, you are correct. If you decide to draw it like this, you're also correct. If you want to draw it like this, you're also correct. Okay, this looks like an upward triangle. You're also correct. You get it? So, like I said, the structure, the name is not important. Just make sure that you get it right. Now, this is what we are considering, this structural break. But I have to wait for this particular structure to be broken, this retracement structure. Because when a major structure is being broken, there is always a retracement. Always wait for the retracement structure to be broken. Now, because by the time you are waiting for this retracement structure to be broken, it helps you to filter away all the noise. Because if this market would have returned back to this level, back to this consolidation, I would have also known, because it's to break this structure. And when the structure is broken, I know that yes, the market is not ready to go anywhere. So, but instead, the market came and broke the down part of it, confirming that yes, this structure have been broken. So this will be my entry candle. This will be my entry candle. This will be my entering candle. And this will be my stop. My stop will be around this level. Now, like I told us, the wider your stop, the smaller your lot size. The wider your stop, the smaller your lot size. Now, this would have, you can put your stop around this level. Good. This level is very good for your stop. You can also put your stop around this level. It's also good. Yeah. Just make sure that if you wanted to use, let's say, 0.1 lot and your stop loss is here, please, if you want to put your stop loss here, reduce that lot to 0.05 so that you will still be risking exact amount that you want to risk for that trade. Okay, so let's just leave it here. Now, I always say target 1:2, 1:1.5 is good. 1:3 is also fair, but don't target more than that unless if you are a position trader. You can target more than that. But if you are an intraday trader, 1:2, 1:3 is fair, because the market always gives you 1:1, 1:2, more than 1:3, 1:4. So that is why sometimes, because of this, we'll enter a trade and we'll be on a profit, and before you know, the market will retrace and stop you at, you lose your money and you lose your profit. Okay, so that is why I always advise, if you are an intraday trader, target 1:2. If you can get 1:1.5, it's also fair. If your accuracy is very high, 1:2 will make you a lot of profit. Okay, now the market broke. Now, if my stop is here, I will just relax for the market to do what you want to do. Okay, now there are some people that always add to their trade, which is not a bad idea. It's not a bad idea to add to your trade, but please never add to a losing trade. Never add to a losing trade. If you want to add to a trade, let's say you trigger a trade here and the market came down, you can also enter another trade around this level. You can enter another trade around this level. You can enter another trade around this level. You can just put your stop loss around here. Now, you can put your stop loss around there. And now this trade you are entering should be, don't increase the position size. Let's say you use 0.1. As the market is moving, don't go and enter 0.2. At least you can enter 0.05. As the market is going, just reducing the loss size like that, it keeps you in check. Now, what some people normally do, once they just enter a trade, let's say 0.1, and the market is going, immediately the market just moves to their table, they will enter one lot or enter 0.3. And all of a sudden, the market can start reversing. And when it starts reversing, you will lose the profit you have made very fast. Now, you can see, let's assume that we actually hold this trade. This is a very good move. It's a very good move. And why was it a good move? Because this is a major structure. I told us I'm going to explain how to identify a strong and a weak structure. Okay. Now, this is a very good and a strong structure. That's why you saw how the market move. It's a very big move, like a very big move. Okay. Now, this is how you approach the market. This is how you approach the market. Don't be in a rush. Don't be in a hurry. Don't try to make all the money in one trade. No, it will mess up your psychology. It will mess up your psychology. Don't try to risk too much, because the more the risk, the more the losses. Don't see that the more the risk, the more the profit. No, the more the risk, the more the losses. Because if you have a $1,000 account and you are risking $200 per trade, you just need 5 trades to blow up the account. But if you have a $1,000 account and you are risking $20 per trade, of course, 5 trades, you still have enough money to enter more 5 trades. So that is why it is better risk at least 1% of your account. Let's say you want to risk a lot. Don't risk more than 2% of your account per trade. What I normally do is that if I want to risk $500 in a day or $1,000 in a day, if that's what I want to risk, I divide it into several trades. Okay? Into several trades with the trend. There's no way out of 10 trades, 4 will not go to my favor. And if 4 can go to your favor, and if you're using a risk reward of 1:2, definitely you will still be in profit. Okay? Even with 6 losses, you will still be in profit. Okay? I will be ending this class here. Just watch out for the next class. We'll keep on doing analysis on different charts so that you get to understand this concept. Okay? Before you go, please always spend time on your chart. Always spend time on your chart. No matter the time you spend in the class, in the lecture room, always spend time on your chart, on your own. Draw the structure anyhow, get it wrong, get it right, remove it, start afresh. That is the only way you can actually master it. And I tell you the truth, Forex is very simple. Very, very simple. Just keep practicing. Even when it does not look like you are growing, keep practicing. Growth in Forex does not come overnight. It comes subconsciously before consciously. That's the truth. Growth in Forex comes subconsciously before consciously. So sometimes you may not even know that you are growing, but I tell you the truth, you are growing. All right, see you in the next class.